Welcome back to my channel, my financial journey. Today I'll be discussing the Vanguard Vti, which is the total U.S. stock market, and in my opinion, it's the only fund, only stock, only thing you need to invest in. Like if you're like me as a new investor, you can pick stocks, but stocks will, if you're not the kind of person who can analyze a stock and read a lot into the stock, you're better off just investing in an index fund or an ETF. But because I'm in Canada right now, I live in Canada, we're not offered index funds. All we can invest in is ETFs. So the difference between the ETF and the index fund is there's much difference. The only difference is that with an index fund, when you own an index fund, you can't sell it until the end of the closing day. So if you have an index fund saying you have Apple, and Apple is tanking, and you can see the stock going down, tanking. You can't sell that stock until the end of closing day. So you can go right to zero and use all your money. But with an ETF, it's traded as a stock. So you can buy and sell it throughout the day at any time. There's no restrictions on that. So if you see your stock tanking, or the ETF is tanking, and you want to sell it, you can sell it right away, and you can buy right away. That's the only difference between those two. The returns are basically the exact same returns on the ETF and index because it's the exact same funds. The Vanguard Total Stock Market ETF has the exact same amount of funds, same amount of stocks in it as the Vanguard Index Fund. So there's no real difference. The only difference is that the index fund, you can't sell it until the end of closing day, market day, and the ETF you can sell it anytime. So today we'll be discussing the Vanguard Vti, which is the total U.S. stock market, and in my opinion, if you're a new investor like I am, it's the only investment you'll need. Because in this ETF, it has every single U.S. stock company. It has your Apple, your Amazon, Netflix, and these are companies that are very expensive to buy individually. So instead of buying a company individually, you buy the whole stock market, and that way you have every single stock in your portfolio. And it's broken down in percentage-wise. So that's what I have in my portfolio. It has large cap companies. Large cap companies are the big companies like Amazons, the Teslas, the Berkshire Hathaways, Netflix. Those are the big companies. The large corporations, multi-billion-dollar corporations, international companies. And that's another reason why you should own the VTI. Because even though it's a U.S. stock market, there are a lot of companies in this ETF, in the stock market, that are international companies. Even though there are American companies, they're also located in China. They're located in almost every country in the world. You'll see American companies that are located all around the world. So you don't need to buy an international ETF. Just buy the one U.S. Vanguard ETF, the VTI, and you're covered for every major company on the planet. So it pays back a good return. We'll get into that later on, but it's a very, very good fund. And if you're not the kind of person who's gonna study the stock market and read journals and read books, and you just want somewhere you can invest your money and not think about it. If the stock market goes down, all that means you buy more of the fund. If it goes up, you wait and see. But if you buy, to say when the stock market goes down 10%, it's called buying the dip. When it goes down 10%, you buy more of the stock. If it keeps going down, every 10% you buy more. Just keep buying more, keep buying more, keep buying more. Because the lower it goes, the cheaper it is to buy. So they always hear the term buy low, sell high. That's what it means. When the stock market is going down, most people panic and sell their shares right away because they want to lose money. But the smart investors, when the stock market goes down, they get happy because when it goes down, I mean it's getting cheaper now. It's a sale. It's like Black Friday all over again. Every stock market crash is Black Friday to the smart investors. And that's it. And right now the expense ratio for the Vanguard VTI is 0.03%. That means that's what they charge you for every $10,000 you have invested in the VTI ETF. They charge you 0.03%, which is pretty cheap. It's almost free. So if you're to pay a financial advisor, he's charging you 1% for his commission, and every time they purchase a stock or a share on your behalf, you gotta pay for that. They get the benefits of commissions for every time they buy and sell stocks in your portfolio, and you gotta pay the taxes, because whenever you buy a stock or a share, if you sell that stock within a year, you charge higher taxes. If you hold a stock for more than a year, you charge lower taxes. And that's one of the great things about the ETFs. The taxes, you don't pay much taxes on this, because it's not an active fund. Your stocks aren't being bought and sold every day. The only time a stock will come off your ETF is when if it goes bankrupt or it goes out of business. You don't need to worry, because once a company goes out, they replace it with another company. So you don't really see it. And usually it's a small cap company that probably go out of business, and there's thousands and thousands of other companies waiting to get on the U.S. stock market. So as one goes down, one gets replaced. So it automatically gets replaced. So you never have to worry about that. And like I said, in this ETF, the Vanguard Vti total U.S. stock market, you've got all the U.S. companies. You've got the large cap companies, you got the mid-sized cap companies, and you've got the small cap companies. Those small ones you never heard of. The small cap companies you probably never heard none of their names, because they're small upcoming businesses, But every company that's in the stock market now was a small upcoming business. So don't let that bother you. So the expense ratio is 0.03%. The assets under management is $189.80 billion. So a lot of billions invested in this fund. And what else we got here? We got going down here. Keep scrolling down. There we go. Performance. Everyone's favorite subject. Well, right now the Vanguard Vti after 1 month's performance is 8.82%. So no bank in Canada is going to pay you 8.82%. Most banks right now are paying you not less than 1% to have your money sitting in their account. If you're to invest your money in the Vanguard Vti, after 1 month, it's 8.82%. 3 months out, it's 7.08%. Still not bad. Year to date, it's up 16.54%. After 1 year, you're at 19.27%, and this is including through these recessional times here. This is including the COVID-19. So this stats here are from November 30th, 2020. So these are current stats. So even during the pandemic, what's going on right now, you're still up 19.27% as of from January to now. So that's pretty awesome in my opinion. And after 3 years, you're up 14.09% on your investment. Going back 5 years, this fund is showing you're up 13.98%. And after 10 years, so if you go back all the way back to 2010, your investment is up 14.02%. So, if you invested $10,000 back in 2010, you'd have almost $40,000 in your account right now. So that's four times your money in 10 years. If you had $100,000, you'd have over $400,000. So you can't really go wrong in this. And it's like I said, this is trouble-free investment. You can pick stocks, you can pick individual stocks. People like to pick individual stocks, but if that stock goes down, you lose everything. That's why people see this stock starts tanking, they sell. Now I only invest in ETFs, because with ETFs, it's got hundreds or thousands of different stocks inside the portfolio. So if one or two stocks go bankrupt, it doesn't really matter, because for you to lose money in this fund, every single stock in that ETF would have to go bankrupt. And what are the chances of every single stock in the U.S. stock market going bankrupt? Not very likely. If that was to happen, the whole world would end. So worrying about the stock market would be the last thing on your mind. So that's what I'm currently investing in, the Vanguard Vti. Keep in mind, I'm not a financial advisor. This is just for educational purposes. I'm not giving you advice. So do your due diligence, and if you're interested, do your own research, your own homework. I am just giving you my personal opinion on my financial journey and what I'm doing. So if you're interested in getting started, just do your own homework. Just go on YouTube, go to Google. You know, information's all there for you. If you're willing to do a little bit of homework, you know, the rewards could be awesome for you. You know, and thank you for watching my channel, and I'll see you next time. Take care.